Hi folks, welcome to this video on your third quiz. Now, in this quiz, it was very similar to versions 1 and 2. It had some elements of both. The first thing you'll notice here is that we have an item here, land held for future use, as we had in version 1. And you'll also notice that if you look at the $90,000 cash balance, we have here in our question that the $1,500 overdraft was netted out of that cash account, and it's being held at the same bank, just as you had in version 2 of the quiz. So you had to think about how you might handle those two because they were from two different quizzes, but the question is pretty much the same as or kind of a hybrid of those two quizzes. You also notice here that if you look down, you had item number 5 where the fair value through OCI investments were valued at $45,000, which we had in one of the previous quizzes as well. So you had to think about how you would handle that, similar to what we did in a previous version. But in any case, you still had the same required. You had to prepare the statement of financial position current assets section. So if we go down below, again you'll notice here I set it up as cash and cash equivalents, which you can do. You didn't have to adjust for the bank overdraft again because it was at the same bank, so netting it out as the company did was absolutely fine. And there was a term deposit in there, so some students would have just put cash and cash equivalents in there and stuck with the $90,000 balance. That was probably the easiest thing to do. Some other students, I think there might have been one, decided that they would set that up at $87,000 and not include the cash equivalent there, but then set up the cash equivalent separately underneath, which can be done as well. All right, and you just set that up at $3,000. Which would be fine. The cash and cash equivalent balance together would still be $90,000. That's not an issue. Not everybody did that. Most students either put cash and didn't put cash equivalent in there, and those of you that caught it might have put cash and cash equivalent as one account as I did, or separated it out. Either was fine. So now, if we go back here to the way it was originally, and I'll just add the words and cash equivalent back here. Okay, now we go to the fair value through net income investments, and we know that those are current assets. We did have the fair value through OCI investments here at $43,300, but they're non-current as we know, and patents are intangibles and go underneath the PP&E assets in the long-term or non-current assets section of the statement of financial position. So they're not in here. And again, these fair value through net income investments are like investments held for trading. We talked about those a little bit in 10,005 as well as in our current course. So they're current. And now underneath that, we'd have accounts receivable, less the allowance. And we had to show the two pieces of it because we asked you to do that up here, to show the accounts receivable at their gross amount, right? So we asked you for that presentation, less the allowance balance. So I was expecting you to show me that. So what some students did is they said, well, it's $52,200 at net per the question, but we also know that that includes consignment receivables. And we know there's no such thing as receivables on consignment goods, so they would have netted that out. So some students would have said, well, I'm going to take my $52,200 in accounts receivable at net and remove that $5,000 on consignment. So I'm going to wind up with a net balance of $47,200. So that's my net. So what number would I have to have at gross such that when I deducted that allowance, I would get that $47,200? Well, if I work backwards, it's $52,000. Now, if you're not able to see that here, maybe if we did a little separate presentation of it up here, right at the very top. Again, if we understand that that $47,200 at net is just your original number at net, less $5,000 in receivables on consignment because there's no such thing, we should have had at net $47,200. So what is our number we'll call X, such that when we deduct $4,800, we get $47,200. And if we work backwards, we see that's $52,000. Some students did it differently. Some students said, well, wait a minute. So if we go down here, some students might have said, well, wait, We know that we have $52,200 at net. So if I subtract $4,800 from some number, I'm going to get that $52,200. So what would that number have been? $57,000. But we know that in that balance, there's $5,000 that we can't include because it included receivables on consignment inventory, and we don't include consignment inventory when it's given to the dealer is not a sale. The real sale is to the third party, the customer, the dealer's customer. So the idea is there are no such thing as receivables on consignment sales. So therefore, we would have deducted that $5,000. Some students said, well, I'll deduct it from the $57,000. And in that case, they would have got $52,000. So therefore, they would have said, well, $52,000 less the $4,800 would give me $47,200, and work from the top down as opposed as I did from the bottom up. Either presentation is fine, but this is the one I used in the solution. So if you want to go with that one, great. So now if I go back to our problem, all right, I have my inventory here at $62,000. Why? Because if you go back to the original statement of financial position, our inventory was sitting at $57,000 right up here. Well, that $57,000 excluded the goods that were shipped out in consignment. But don't forget that consignment inventory belongs to us. So even though it's not on our premises, it needs to be included as part of our inventory count. So we have to add that $5,000 into the $47,000 that we have there to get $62,000. So now we'll come up with total current assets of $223,200. In this example, we did not need to include, as we did in the previous version, our land held for our land account here, because our land is being held for future use, meaning that the company hasn't determined how they're going to use that land. So we wouldn't include it as part of our PP&E assets because it's not helping us generate revenue. It's being held for future use. That use hasn't been determined. So therefore, it's a long-term investment. But in either case, it's not a current asset. So therefore, we wouldn't include it in our current asset balance. So therefore, we wind up again with $223,200, and when we divide it by 75,000, which is the account balance for our current liabilities, that's going to give us 2.98. Now, we did ask you here in Part C to find the final balance in the AOCI account, which is part of your shareholders' equity. Most students did a fabulous job here. They knew that they started off with $100,000 because that was given to you in the question, and they said, I know that any change in the value of that fair value through OCI account, investment account, is going to affect my AOCI on the balance sheet. So again, anything that affects your OCI balance in the statement of comprehensive income affects your AOCI. Anything in net income affects retained earnings. Anything in OCI, which is part of your statement of comprehensive income, affects your AOCI. So now we know that our investment went from $43,300 to $45,000. So that $1,700 difference or increase is going to be added to our $100,000 here that we had to open the period, which again is right up here. Right? We have it right up here. So that amount of $1,700 difference is going to be added to the accumulated other comprehensive income account. So we would see now that we have a balance in AOCI of $101,700. So that includes our presentation of version 3 of your quiz. I hope you found it helpful.